Hello, everybody. Welcome to the fireside chat this evening, and I hope you're doing well. And for those of you who wrote any exam today, financial reporting, corporate reporting, I hope that it was good. Whatever be the case, you gotta go for tomorrow's paper. So whatever happened has happened already. There's nothing you can do about it. So let's go to management accounting and let's see what we can do in respect of that. So welcome to the session this evening as we spend some time to, chit chat, share our thoughts on some few things that you need to understand to put yourself in the position to go into the exam hall, write the exam with confidence tomorrow morning, and most importantly, be able to pass the examination. So, what I want to do first is to probably take some questions if there are any for me. So, if there is any question you have, something you want to pick my thoughts on specifically, right? Something specific that you want to pick my thoughts on, you can put it in the chat for me, or you can raise your hand and I bring you up to be able to ask your question. So, anything for me before I get excited to see what I can do? Any specific questions, or everybody is in a comfortable lead? So that if we are in a comfortable lead, then we can just close and go and take a nap so that tomorrow morning you'll be in a good shape for the examination generally in that case. So any questions for me, you can bring it up quickly, then we can get into the discussion. Now, there are 4 things you must understand if you are going to pass the management accounting examination. 4 things. And over the last 12 weeks, these are the 4 things that we have been trying to work on. And as we are having this concluding discussion, I want to highlight that again for whatever time you have, less than 12 hours to go for the examination at the end of the day, a little over 12 hours to go technically at the end of the day. The first thing is the understanding of the principles underlining each of the topics in management accounting. That's the first thing we must understand. And so at this point, the key question you need to ask yourself is, do I understand the principles underlining each of the topics? That is very important. So when we take transfer pricing, performance measurement, ROSI calculation, ROI calculation, EVA calculation, dealing with issues in respect of the overall performance measurement of the organization. When we come to issues about budgeting, the functional budgets, the master budget preparation, do you understand and have at your fingertips the principles underlining each of these key areas in budgeting? We come to variance analysis, the basic variance issues, the overhead variances, the sales variances, when the entity is using more than one material, mix and yield variance, when we are selling more than one product, then sales quantity and sales mix variance. Do we have an understanding of each of these, the topics relating to each of these areas? Short-term decisions, yes, that is a very huge area, and the examiner is going to be putting that in question 5 for us. But at this point, are you strong in shutdown? Do you understand the principles? Are you strong in throughput accounting? Do you get the principles? Are you okay in break-even analysis, dealing with multiple product environments, and all of the nuances under short-term decisions, relevant cost analysis, make or buy decision, name them, all of those short-term decisions at this point, are you okay? So on the overall, that is the first thing we must really get ourselves into, underlining the underlying principles for each of the topics. But you have to understand that to be able to excel in the management accounting, there are some fundamental principles that we must know about. And that is classification of cost. So at this point, have you been able to review the principles underlying classification of cost? Because classification of cost is going to play a key role in the exam hall. If you're supposed to calculate the cost sheet or the cost card for anything, we must know the pro forma. Classification of cost will also help us to know the various cost behavior issues, and most importantly, how we can separate cost into the fixed and variable components when we have a semi-fixed, semi-variable cost using the high and low method. Because the high and low method may be applicable when in the cost environment, but also can be called on even in budgeting or variance analysis. And you've seen that we've applied it across board. So the high and low method, you must understand the principles there very well. You know that in the high and low method, we are bringing maximum total cost, minimum total cost, maximum output, minimum output. But in a question where the maximum total cost is not corresponding with the maximum output and the minimum total cost is not corresponding with the minimum output, in that case, the output becomes the basis for choosing the corresponding cost items at the end of the day. So high and low method principle, understanding that very well. Not only that, we come to the issue in respect of the overheads, and so the absorption costing principle, preparation of the profits statement under the marginal costing principle, absorption costing principle, dealing with the concept of over absorption of overheads, under absorption of overheads. All right, marginal costing principle, that is crucial because in all the short-term decisions, that is the principle we are going to be applying at the end of the day. Then you come to activity-based costing. Yes, we may have it as a dedicated question on its own in the exam hall to use the activity-based costing to estimate the cost of the entity's product, service, or an undertaking. But also, the activity-based costing principle is applicable even under the transfer pricing environment, because we could be asked to calculate the transfer price using the activity-based costing principle. And so these are fundamental, non-negotiable principles that at this point we must have at our fingertips. And so the question I then ask again is this: all these principles in all these areas, how strong are you at this moment? If you are upward of 90% of the principles, meaning you know them, that is the starting point. Because ignorance of the principle is the beginning of disaster. Because in the exam hall, all we are doing is applying the principle. So that is the first key thing we must understand when it comes to the management accounting examination, having an in-depth understanding of the principle. So if there is anything that I've mentioned, any of the topical areas that I mentioned, that you are not strong in the principles, then it is important you sit it out. You have a little over 12 hours to go to review that using the summary videos to make sure that you are strong in those principles. But that's the first part of the journey. The second part of the journey is comprehension. meaning understanding the context of the question. And this is where your English language and your calmness is going to be playing the role in the exam hall. So, have you been able to practice enough question in such a manner that you have familiarized yourself with the way the examiner is going to be stating the question and what you are looking at? Especially in the short-term decision issues, the grammar, the context of the question, in budgeting and budgetary control, the concept and the questions, variance analysis, the context of the question and the various principles. Understanding is going to play a key role. So the question is, as you are here now, as you are preparing for the exam, how far have you gone in trying to look at comprehension? But there is one thing you can do in the exam hall, and that is to be calm. Because the way the management accounting paper is, if you read hastily, then you're going to make faulty judgments and you're going to fail the examination at the end of the day. Because the context of the question must be understood to be able to apply the underlying principles based on the question. So yes, you can understand the topics, you can understand the principles, but if you miss the context of the question, the grammar, the expression, out of anxiety, fear, and you are not calm to get the context of the question well, then you're going to create disaster for yourself. But that is the second thing we must understand. Having the ability to focus and stay calm, to read the questions and understand the context of the question. That's the second thing. And so if you pay attention throughout this 12 weeks period, all we've been doing is, I don't think we ever solve any question where I finish reading before we solve the question. No. We go to the requirements, then you read. As you are reading, you are working, interpreting. That is called focus and calmness. Why? Because you don't want to get a lot of things into your head to affect your interpretation of something that you are reading generally at the end of the day. So that's the second thing you must understand. Comprehension. Having the mental capacity to decipher what has been presented to you, understanding it, and knowing how to apply the principles. And that will require focus and calmness in the exam hall. The third thing is then to apply the principles based on the context of the question. Because you see, we will see a question on budgeting. There will be a question on variance analysis. There is a question waiting for you on the short-term decisions. There is a question waiting for you on performance management. There is a question in the exam or waiting for you on the public sector issues. The question is, can you apply the principles? That's the idea. And so the application of the principles would depend on the point number 2, which is understanding of the context of the question. If you miss the grammatical expression, the context of the question, then you may not be able to know which principle to apply based on the context of the question at the end of the day. And that is very important. Once we are able to understand that, the fourth thing, which is going to be the biggest challenge of all for you to pass the examination, will be working with speed and accuracy. The problem in management accounting is that management accounting is not that the question is difficult. The problem is, by the time you finish interpreting the question or the statement, what is going to be happening is that you're going to spend a lot of time at the end of the day. So by the time you hear, get ready to stop work, or 1 hour gone, or 2 hours gone, you're already toasted. So mentally, you have to work with speed and accuracy. And that is why we tell you that the way you approach this exam is, we're going to have 70-30 or 65-35 in the exam hall. So we're going to have about 30%, above 20% questions on written. Then there's 70% area on calculation. So to optimize our time in the exam hall to be able to work with speed and accuracy, what we need is to first answer all the written questions. Now, the written questions are going to be spread across board. So we're going to have some theory questions in question 2. Question 2 over the last 3 examination that has largely been theories, because that's where we see the examiner burying some budgeting issues, some models of evaluation issues. Then we come to question 3B, we come to question 4B, sometimes question 5B also, there is a theory there. But the theories are going to be spreading across. So when you get to the exam hall, to optimize your chances, to manage your time well, you want to take out all the theories that you can answer best first. That is the strategy you need to be able to pass the examination. So when it comes to this management accounting paper, these are the 4 key issues that I can say you have to be mindful of. Getting an in-depth understanding of the principles. Making sure that you read the question calmly with focus, no distraction, to get the context of the question. Then you can apply the principles. Then you can work with speed and accuracy at the end of the day. And that is very important for you to know about. Give me a sec. It's like I'm having a little problem. Can you check? I think I've lost. I don't know. YouTube is gone. I don't know. Yeah, stopped. Yeah, so you can check. What? No, I'm not sure. So, if you understand the principles, be able to understand the context of the question, then you can work with application of the question, then work with speed and accuracy. So the goal is to reduce the gap between reading the question and ultimately providing an answer to the question at the end of the day. If you can do this, then you can pass the examination. Because at this point, yeah, all other things being equal, you understand the principles. At this point, all other things being equal, you've expressed some grammatical understanding. At this point, all other things being equal, you have tried to work with time, speed, and accuracy, and all those things. So you should be in a better position as you go into the exam hall for the exam tomorrow. So what I want to do generally is maybe share some thoughts on some few things quickly, and then we should be out of here, subject to the fact that I will have some other questions coming in as we proceed. So let me bring up my screen quickly and then let's go. So, key principles relating to key topical areas that we have to be mindful of when it comes to the examination. What are the key principles? What are the key topical areas? What are the key topics that we have to be mindful of to pass the exam? So yes, let me go into this guy, standard costing and variance analysis. 15 marks question waiting for us there. And we've spoken about the styling of choice of questions available to the examiner. That on the theory side of things, types of standards, right? Attainable standard, unattainable standard. We spoke about basic standard, current standards, all those things. Objectives of standard costing, uses of standard costing, then limitations of standard costing, all those things are there. Stages involved in setting standards, those are also there that you have to be mindful of at the end of the day. Then the last part is where the variance are given and you're supposed to analyze the variance and explain to the to management what is happening in the variance. So those are the theory issues that we highlighted that the examiner is going to be getting goosebumps on. On the calculation areas, importantly, also we said there are various styling of the questions that the examiner can go for. The first styling is the usual thing where we are supposed to calculate the basic variances. And the rule is very simple based on the context of the question. So for instance, when it comes to the direct material cost variance, we said it is divided into two, and that is direct material price variance, direct material usage variance. If you remember the discussion very well, we mentioned that when it comes to direct material price variance, let's see. We mentioned that when it comes to the direct material price variance, this is based on the actual material that has been bought, or if you want, used during the year. So for the actual material that has been bought or used during the year, how much should we have paid for it and how much did we pay for it? That is the direct material price variance. The direct material usage variance, on the other hand, is based on the actual units we produced, right? Actual units produced, taking into consideration the actual material used. So for the actual units that we produced, how many kilograms of material should we have used? How many kilograms of material did we use? That is what we must understand when we talk about the direct material usage variance. Direct material usage variance. Very important thing there that we must know about. But we mentioned that sometimes the entity may have more than one product that it is using, or more than one raw material that it is using in the production of the goods or rendering of the service. And so the direct material usage variance can further be divided into the mixed variance and then the yield variance. The mixed variance has to do with the combination of the materials for the product that has been produced, and then the yield variance has to do with the material that we've used as compared with the output that we had and the output that we should have had based on the material that we have used. And that is the concept about the mix and the yield variance. You know the deal already that we're going to have the actual quantity in standard mix and then actual quantity in actual mix. So the deal here is that just bring your actual units here, add it up, and then bring the total here. Then you must work this out using the standard mix given to us in the standard cost to get your actual quantity in standard mix. You get a difference at the end of the day. And so if, for instance, the actual quantity standard mix exceeds the actual quantity in actual mix, that's a favorable variance at the end of the day, because it means that we've used less than we should have used at the end of the day, and the reverse is going to be true. The yield variance, we said we can do it in total or for each of the individual materials. And if we are doing for the individual materials, it's going to be the actual quantity standard mix and then the standard quantity in standard quantity in standard mix. And this you will work for. And this is the should have. So based on the actual units that we produced, how many kilograms of material should we have used? How many kilograms of material did we use? That is the idea about that if we are working for the individual. Here, the deal is that this is going to be your should and this is going to be your did. So whilst in this environment, this is going to be favorable, in this environment, if AQSM is greater than SQSM, that's going to be an adverse variance. So we must know the way we play it out. Now, if we are working for the yield variance in total, we said for the actual material in total that was used, how many kilograms of material, how many units of output should we have produced based on the total standard per unit, and then how many units did we produce? And we get a difference, and we have to calculate the standard material cost per unit to multiply that with the unit difference to get our variance coming in there. So that is the idea if the entity is using more than one raw materials or input in the production of the goods and services for the period under review. But not only that, also there is another school of thought here where, for instance, the direct material price variance, it could further be divided into two. Because the direct material price variance tells us how much we should have paid for the units that we produced, for the material that we bought, and how much we paid. So we can further divide that into two to understand what is going on between the procurement department and to find out the efficiency and effectiveness of the budgeting system in that department in that regard. And that is very important at the end of the day. So here we can have direct material price planning variance, direct material price operational variance. So that is the issue here that we must understand. Now, the direct material price variance is trying to assess the efficiency of our procurement department, right? Whether they are able to estimate the prices well. So we're going to be looking at the difference between the budgeted price minus the actual price that we paid for the actual units that we bought, or actual material that we bought. So that is direct material price planning variance. So what was the budgeted material price per unit or per kilogram minus the actual price that we paid, right? And then that is going to multiply by the units that we produce. Now, this is a realm that the examiner may not take us to, but it's an operational issue that may come up if the examiner wants to dive deeper into getting us to understand what is going on in the direct material variance. So those are the basic issues that we must understand, direct material. The second area is direct labor cost variance. That can also be divided into two, as we know already. That is direct material rate variance, direct labor rate variance, direct labor efficiency variance. The deal is simple. The direct labor rate variance is based on the actual hours paid for. So the actual hours paid, how much should we have paid? How much did we pay? That is the direct labor rate variance. The direct labor efficiency variance, this is based on the actual units we produced. Okay, actual units produced, taking into consideration the actual hours worked. So for the actual units we produced, how many hours should we have used? How many hours did we use? That is the direct labor efficiency variance that we must understand there. Direct labor efficiency variance that we must understand. Now, if we have a difference between the hours we paid for and the hours people worked, then what is going to happen is that there will be an ideal time variance, right? Ideal time variance. So when it comes to the direct labor environment also, that is the rule. Now, as we mentioned, the reason why we must understand these basic principles is because if the examiner is coming for us under variance analysis calculation, even if the examiner wants to go with a reversal approach, you still have to understand these principles to be able to apply the reversal approach very well based on the context of the question that you have at your disposal. And that is very important there. So that is why these principles, we must know them. Number two, if the examiner still wants to go with a theory area of variance where he wants us to analyze the variances, then the final figure will be presented to us at the end of the day. And when the final figure is presented to us, or the variances are presented, then we would have to do the analysis. Now, your writing of the analysis will be dependent on your understanding of how the thing was even calculated. So that is why these becomes like the bedrock. Yes, we can have dedicated questions coming in for us to calculate these variances, or the reversal style variance approach questions. We still have to apply the principles. Or number three, the analysis styling of variance question, and we still have to apply the principles at the end of the day. So that is what we must understand here when it comes to the direct labor cost variance. Rate variance, actual hours we paid. Efficiency variance, actual unit we produced. How many hours should we have used? How many hours did we use? Taking into consideration the standard labor cost per hour. Then from here we come to the overhead variances. Now with the overhead variances, you remember we said it will be based on the system that we are having. So in the absorption costing environment, what is going to happen is that we will have the fixed overhead expenditure variance. The fixed overhead expenditure variance, as we said, is the simplest styling of variance question that the examiner can present us with. Very simple. So what does that mean? Here you just bring your budgeted fixed overheads, right? Budgeted fixed overheads minus the actual fixed overheads, and that's all. We are done at the end of the day. But the examiner can take us into fixed overheads efficiency variance. If you remember, we said in the overhead environment, if we are calculating overhead efficiency variance, all you would do is go to the labor efficiency variance, pick the difference from there, and then multiply that by the fixed overhead absorption rate per hour. That's all. So you just pick the difference from the direct labor efficiency variance and multiply that by the fixed overhead absorption rate per hour. And that will land us into the fixed overhead efficiency variance. So again, that means that ratio is very simple, because once we have the direct labor efficiency, the way we are supposed to get the difference from there, then we will just need the fixed overhead absorption rate per hour to be able to then know what has to be done in that particular case. So that's the second thing. Then we come to fixed overheads. Capacity variance. And we said this is based on the units that the entity wants to produce as compared to the actual units that they produced. Very simple as well there. So we're going to bring in the budgeted units minus the actual unit we produced. The difference is going to be taken at the fixed overhead absorption rate per unit. Fixed overhead absorption rate per unit. Then at the end of the day, if we want fixed overhead volume variance, it means we can use these two and then get our answer coming up there in that particular case. So when it comes to the fixed overhead environment, these are the things that we must understand. Now, this is if we are in the absorption costing environment, because sometimes it depends on the context of the question and the way the examiner is going to require us to provide an answer based on the structuring of the question. But that is the fixed overheads and absorption costing. In marginal costing, we're just going to be interested in usually the first two, expenditure and efficiency variances. Those will be the two that we will be really interested in the marginal costing environment. That's all. Now, in how do we call it? Absorption costing, variable overhead. There we'll have variable overhead expenditure variance. And the overheads may be absorbed based on the labor hours. So the actual labor hours that people worked, how much should we have paid in terms of, sorry, let me take that again. When it comes to the variable overhead environment, and we are looking at variable overhead expenditure variance, we said this is going to be based on the actual labor hours that we paid for. So for the actual labor hours that we paid for, how much should it have cost us in terms of the variable overhead? How much did it cost us? So that is the deal there. Also pretty simple. The variable overhead efficiency variance. No problem. You just go take the difference from the labor variance and multiply the results by the variable overhead absorption rate per hour. Then we are done at the end of the day. So those are also some of the things that we must understand when it comes to the calculation of these various variances as well. Now, remember, as I said, we could have a question, 10 marks, and it is just on the overheads that the examiner wants us to calculate. That's all. Just on the overhead. So the examiner can just focus on overheads and ask us to calculate the overheads. Then we come to the last one, which is going to be the sales variances, right? The sales variances. Now, with the sales variance, we said we have the sales price. This is a difference between how much we should have sold the actual unit and how much we sell it for at the end of the day. So that is the sales price variance. And then we go to the sales volume variance. Now, this will be based on the environment we are in, but it is going to be the budgeted sales minus the actual sales. The difference will be multiplied by either standard profit or standard contribution, depending on the environment we are in. I think last semester the examiner was excited on the sales variances for multiple product environment or so in that case. So that is the idea there about the sales variances. So what are we saying? For starters, all of these fundamental principles must be understood for the variances. Because now the examiner can just say, hey, required, prepare the operating statement. Okay, required, prepare the operating statement. Okay. If the examiner says we should prepare the operating statement, you know what that means. It depends on the environment we are in, but you have to bring your budgeted profits, bring your sales variances, then you bring all the variances that you need to calculate based on the context of the question. So if the examiner says prepare operating statement, it means we should be able to calculate all of the ratios, then you can now prepare the operating statement. And like I mentioned, it is a styling of question that the examiner hasn't asked yet under this new syllabus workflow. Then the overhead styling of question is also something that the examiner has not asked yet under this new syllabus outflow that we must know about. And so that is operating statement preparation. Please make sure you review the pro forma of the operating statement preparation, because that is very important as well in that case. Then certainly the last issue there is the reversal approach that I mentioned, that the examiner can give us the standard and the variance, then he will ask us to calculate the actual. Or we will be given the actual and the variance, then the examiner will ask us to calculate the standard. So these are all styling of questions that you must understand. Again, if you have been really serious by now, you've gone through all of these styling of questions and the variance analysis, especially leveraging the practice question course at your disposal to be able to go through those things. So when it comes to the variance analysis, the calculation areas, these are the things we must understand. The fundamental principles underlining each of the calculations. Number two, the styling of the questions and the way we have to approach it. So whether we are preparing operating statements or doing reversal styling of variance analysis, the fundamental principles will be coming up, because that will feed into the way we do the calculation at the end of the day. Then certainly the analysis part. Reasons why sales variance is positive, is adverse. Reasons why material price variance is favorable. Those things, we must be mindful of that. Because in the 15 marks area, if the examiner wants to go 10 marks variance, 5 marks theory, then it can go. But let me also say this. Strangely, there has been moments where under this new syllabus where the examiner did not bring 50 marks fully question on variance, which means that there was an examination that he brought just 5 marks theory question on variance, and the other 10 marks, the examiner actually took students back to the basics, cost classification issues, to be able to prepare the cost card or the cost sheet. And I think that was just a little misappropriation or error on the part of the examination committee, and so going forward that is not going to be happening. But if we go by the structure of the syllabus and the exam by standard, then we should have the 15 marks area on these variance issues that we must understand. So these are the fundamental principles and the way we deal with them. That's very important. Now, so at the end of the day, once we know these principles and the nuances of the questions and the way we have to write out our answers based on the various nuances of the question, then it should be good at the end of the day. Okay? You should be good at the end of the day. Please give me a sec. Can you check? Yeah, I've shared it. If it is so once we get these principles, you're going to be good at the end of the day. So that's variance analysis, and then the nuances that we must understand under variance analysis. Then we come to the brother of variance analysis, and that's going to be budgeting, right? 15 marks also in the exam hall. So in budgeting, what are we looking at generally? Again, here, there are a lot of theory questions that the examiner can set, a lot of theory questions that the examiner can access that we must be mindful of. And so the importance of budgeting, the stages or process involved in the preparation of the budget, then the budgeting methods or approaches, right? Incremental budgeting, zero-based budgeting, activity-based budgeting, bottom-up budgeting, rolling budgeting, like all of those approaches of budgeting. These are theory issues that the examiner can ask you. I believe that at this moment, certainly you've been able to read through those approaches of budgeting. Very important. Then when it comes to the calculation aspect of budgeting, as we mentioned, the examiner can put us in the spot for the preparation of the functional budget, as we know already. And then the examiner can put us into a spot for the preparation of the master budget. Then there is a styling of question as well, even under budgeting, which is called the rolling budget. I'm going to share some thought with you on that in a moment. The rolling budget styling of question. So when it comes to the functional budget, you remember the thought process that we put across. Give me a sec. Let me see if I can get my diagram that I used here. No, not this one. There we go. So when it comes to the preparation of the functional budget, we discuss the principles. And that's what you must understand. Now, this is the trick. The way the question will be set under budgeting, the English language is something that you have to really be bothered, be concerned about. Because if you miss the wording, the structuring of the questions, then certainly you're going to be missing a lot at the end of the day when it comes to budgeting. So, in addition to, yes, getting the principles on budgeting, the English comprehension, taking time to understand the structuring of the wordings and how they mean will be crucial here. So, sales budget, if the examiner wants us to prepare a functional budget and start with sales budget, we know that it's not a rocket science. There is not much that we can do there. There is not much the examiner can affect us with there, apart from the fact that the selling price per unit. Right? So we solved a question like that where the selling price per unit nuances, the examiner can make a statement that would have to make you calculate the selling price per unit differently. Now, if you miss that, then your sales budget is going to be au revoir, mon ami. But we said that is the budget prepared by the selling and distribution department to show the amount of units or the units of product that the entity can sell and the revenue that they're going to be generating from the sales. Please, you must know the one-liner definition of all of the budgets, because it's a question the examiner can ask you under budgeting. Write short notes on the following. Then you see those types of budgets. So in that case, the examiner is not bringing any calculation questions. Theory questions define these budgets. It's an area the examiner can prey on students because of lack of attention to defining some of these things. So please be careful about the one-liners. Then we said from sales, we come to the production department to prepare the production unit budget. This is the units that the entity must produce in order to meet the sales unit. Remember that in the production budget preparation, we need to calculate the closing stock and the opening stock. 99.9% of the time, the examiner is not going to give that to us. But the examiner will give us information that will help us to calculate those opening and closing stocks. But the wording will be stated. Maybe the examiner will say, oh, closing stock for every month or every quarter is 35% of the sales of the sales for the next month. Okay. Or the examiner will say that the closing stock of finished goods is 30% of the cost of sales of the next month. Ooh. So it means in that case, we need the cost of sales. Then you can do the percentage of the cost of sales, and that becomes the closing stock of the finished goods. So paying attention to the way the closing stock is supposed to be calculated for the finished goods will be crucial. But the wording will be in the question. It will be in the question. So 3 options available to the examiner largely. Option number 1, the closing stock is given to you so you don't have to sweat. That's too easy. The examiner doesn't like dancing like that. Option number 2 is to tell you that, oh, the closing stock of a period is maybe a certain percentage of the next month's sales. Yeah, that's a little good. But where the deal is even sweetened more is where the examiner said, oh, the closing stock of finished goods is 25% of the cost of sales of the next month. Then you have to do a lot more work. Because in such an environment, we will need to sometimes even calculate the cost of sales. And sana, we can get the closing stock coming in. So all depends on the structuring of the question. But that is the, production unit budget. But when calculating the production unit budget, we mentioned that we may make provision for defective output. You saw it in the final budget question that we solved. And the defective output increases the units that we need to produce. And the rule is very simple. So if the examiner says, for instance, that, oh, maybe 10% of all finished goods are defective, then when you bring your sales unit, add your closing stock, less your opening stock, this figure you get represents 90%. So that the defective output becomes 10 over 90 times this particular figure, and that gives you the production unit. Very sweet, simple, straight to the point. That is the idea in respect of that. That's all. Then we come to material usage budget. How many material do we need to be able to produce the unit? So material usage budget. So that's very simple. The production unit multiplied by the material usage per unit. So normally you don't need a lot of miracle on the material usage budget, just like the sales budget. You don't need a lot of miracles. But if we have to build normal loss into the system for the material usage budget, then that calculation must come. And the rule is very simple, just like this. So for instance, you bring in the production unit, you bring in the material per unit, and that gives you the material usage. If we have to build normal loss, and they say, oh, normal loss of material is 12%, that means this is 88%. The figure production multiplied by material usage per unit, the figure you get is 88%. So that my normal loss will now become 12 over 88 at the end of the day, times the figure you got here, so that you get your material usage budget in kilograms. So that is the deal there when it comes to dealing with the material usage budget. But from there, we now come to the store department, because the store department controls the inventory level. Store and procurement department, they control the inventory levels. Okay, so what do we do there? We are calculating the material purchases budget. How many kilograms of material must we buy for the period under review? Taking into consideration opening and closing stocks, certainly. So this is also another area where we have to do the calculation for closing stocks and opening stock of raw materials. Again, the examiner may be easy on you and give it to you. In other environments, the examiner is not going to go easy, but he will give you the preamble on how the closing stock of raw materials or materials should be calculated. And you follow that procedure, and boom, you do your calculation. But that will be the material purchases budget in kilograms, liters, or whatever unit of measurement that we are using. Then you multiply that by the material cost per unit, and certainly you get your material purchases budget in currency terms. So again, these are the little things. The one-liner definition for each of these budgets, the underlying principles on how these will be calculated. But as always, it's about the structure of the question, the comprehension that you have, the English that the examiner is going to present you with, and your ability to provide answers based on your understanding. Then we come to the labor side of things. Labor usage budget. How many labor hours do we need to produce the unit that we want to produce? Very easy here. So our production unit times the direct labor hours per unit. That's done. But two things can be built into the system, and you saw this also during the mock discussion solving the questions. Labor can have idle time. If labor is going to be idle, meaning their productivity will be below 100%, then we have to build that idle time into the system. So the actual hours will exceed the hours that we needed for the production. But if labor is going to be efficient and the efficiency is above 100%, that's a good thing, because it will then reduce how many actual hours we will need for people to be able to finish and produce our product at the end of the day. From there, we go to the HR department, because the HR determine the wages and salaries of these factory workers. So they are going to then calculate the direct labor cost budget. But remember there also that we can build into the system overtime or bonus. Again, all of those nuances, you saw some of them during the mock discussion questions that we went through those things. So these are the concepts, the principles underlining these functional budget preparation. As I keep on saying, yes, this is the concept. This is the principle. The question is, when you read the question, can you deduce, can you comprehend how these principles should reflect or will reflect in your solution based on the context of the question? So that's where your comprehension comes in, and then the application of the principles also comes in that case. So that is what we must understand generically when it comes to dealing with the issues in respect of functional budgets. But we said there is also the master budget. Cash budget, budgeted income statement, budgeted statement of financial position. The cash budget, we know the rules already, but about the trade receivables schedule, you got to follow the workflow well based on the context of the question if the examiner wants to go there. Then budgeted income statements, then budgeted statement of financial position. So generically, again, when it comes to the budget area, you will not, I hope, by all standards, you will not have problem with the principles, what you know you are supposed to do. It's about, how can I see it in the question? How do I know the examiner has said this and it means this, and work myself out? That's the thing. And as I keep on saying, if you have been working, then by now you have solved that gap, or maybe closing it better at the end of the day. But there is one styling of budgeting based on budgeting methods, which is called the rolling budget. Because you see, in the incremental budgeting, what we said was that here we are preparing the budget based on previous year's data, making provisions. So what it means is that we have the idea issues for maybe 20x5. So we are given the 20x5 budget. Based on that, we can now prepare 20x6. But the examiner is now going to give us some notes to help us adjust those 20x5 figures to be able to get 20x6. That's incremental budgeting. You saw that in the certain budgeting question that we did, where it wasn't even a traditional budgeting question though, but a question where the market growth, if you remember that question, where we needed to calculate the entire market growth, then we'll calculate the company's share of the market, if you remember that styling of question. And I mentioned that is like a flex environment. So that's flex budgeting, because the examiner can access budget preparation question from the methods of budgeting. So we have 20x5 results. Notes are given. We will use those notes to adjust the 20x5 results and prepare the budget for 20x6 as per the context of the question. Then we come to zero-based budgeting. As we mentioned here, you are starting from scratch. So everything must be justified. So we determine the decision packages, the various things we want to do. We evaluate what we want to do at the end of the day, and then we ultimately make the decision what we have to do at the end of the day as well. So zero-based budgeting, we are starting from scratch. Theoretical purposes, we said the advantages of incremental are the disadvantages of zero base, and then the disadvantages of incremental are the advantages of zero base. So once you know these two angles, then you are going to be in a comfortable lead at the end of the day. That is zero base budgeting. But there is another styling of budgeting, which is what I'm bringing you to, which is the rolling budget. Now, the idea about the rolling budget is that it's bringing us in the middle of sort of incremental and zero base a little. What does that mean? The rolling budget means that we will prepare a draft budget for the whole year. Okay, maybe 20x7. So we'll prepare the draft budget for the whole year, 20x7. So that will be in a draft. Then we'll prepare Q1 budget in detail, because based on the current information we have, we can only see in the next 3 months, because the organization is operating in a highly dynamic environment. So when an organization is operating in a highly dynamic environment, zero-based budgeting may not be good. Incremental budgeting will be a disaster. So zero-based rolling budgets will be the best thing. So we have the draft for the whole year, but we prepare Q1 in detail. So at the end of the Q1, we now have current information. Then we can use that to prepare the detailed budget for Q2. At the end of Q2, we now have some current information. We can now prepare the detailed budgets for Q3. That is why it's called rolling budgets. That is another method, approach of budgeting that we must know about. Again, I don't know the structuring of the question that the examiner could get goosebumps on in this budgeting nuances, but it's a styling of question that is interesting in SEMA, interesting in ACCA, that the examiner can also flex you with in the exam hall. But that's the concept. It's nothing new. It's all that, okay, we have the data for Q1. So the examiner gives us information about what is going to happen in Q2. So you use the Q1's data with additional information of what will happen in Q2 to prepare the budget for Q2. So that's why I said it's like flex budget, incremental budgeting. But unlike incremental budget, which is for the whole year, rolling budget, we are doing every quarter, because we are living or operating within a highly dynamic environment. So that's the idea about the approaches or methods of budgeting. Yeah, we have participative budget, non-participative budget there. Take it easy, Nhyira. Participative budget is where the employees or lower level managers are allowed to be involved in the budgeting process. But non-participative budgeting is where the budget is just prepared from the top. Lower level employees are not included or allowed in the preparation of the budget. The examiner can bring a theory question about the importance of involving or including employees in the budget preparation. That's also there. And we have the top-down approach of budgeting and bottom-up approach of budgeting. Top-down means that the budget is just prepared by the HQ, head office, management, top management, and the lower level managers are just asked to implement the budget. Now, there are advantages of that, disadvantages of that. Then bottom-up is what you see here. The traditional concept that we've been discussing is the bottom-up approach, where you are bringing in each department, preparing their budget, then we can now prepare the master budget for the entire organization. So this discussion is the bottom-up budgeting approach, where we are bringing in and letting every department function within the organization have their main budget. Then we bring it and then put it together to prepare the master budget. So those budgeting approaches are also things that we need to be mindful of. In a nutshell, in this budgeting area, the theory issues are there. processes of budgeting, importance of budgeting, the behavioral aspects of budgeting, approaches of budgeting, the calculation area, functional budget preparation, master budget preparation. There is a lot that the examiner has at its disposal, and understanding them is going to be crucial at the end of the day. So that is also the concept of budgeting and what we must understand there. Very easy, sweet, simple, straight to the point. Then we come to this area, short-term decisions. That's question 5 in your exam hall. Okay? Question 5. Now, which one is going to be there? I'm sorry, but as you know already, I don't know. So, shut down. Should we close down that division? That is not making money. The decision rule is simple. We said compare the foregone revenue with the avoidable cost, the cost that we will not incur, or the cost we will save by closing down that division or that part of the organization. And we said the avoidable cost is going to be the variable cost for that division plus any specific fixed cost. General fixed costs are not going to be considered. So if the foregone revenue or contribution exceeds the avoidable cost, boom, au revoir mon ami, we cannot close it down because you are losing more than you are saving. But then if your foregone revenue is less than the avoidable cost, come on now, we shut it down. We shut it down. So that is the shutdown issue. But also there are some theory issues that the examiner can bring. Factors other than financial issues that an organization must consider before making shutdown decisions. So apart from this calculation, what else should an entity consider before making a shutdown decision? Then what are the disadvantages of the shutdown decision? If the entity eventually decides to close down the department, what are the disadvantages? We must understand these very well. That's what we must understand. So that's shutdown. Easy peasy. Then we come to limiting factor analysis. Don't you just love limiting factor? Simple. Identify your bottleneck. Okay? If it is not given, you identify the bottleneck. Okay? Once you are done, get your contribution per unit of the limiting factor. Contribution is selling price minus variable cost. Both production variable cost, non-production variable cost. So you get your contribution. Then you divide that by the per unit of the limiting factor to get a contribution per unit of limiting factor. Then you rank. After ranking, you design your production plan. But here's the deal. In the designing of the production plan, if there is any special contract that the entity has, any guarantee that the entity has, like the question we solved during the mock session, although that was in the throughput environment, we produce that first. And now we apply the ranking rule to design our production plan. Once we design our production plan, we can now calculate the maximum profit. Now, the difference between the marginal costing principle and the throughput principle is in the treatment of variable cost. In the marginal costing environments, the standard, the normal one, it is contribution we are interested in. But in the throughput environment, we are interested in throughput. And throughput is selling price minus direct material cost, and all other costs are treated as fixed costs. So that is the idea under limiting factor analysis and applying the throughput concept there in that case. Number 3 is our beautiful friend, relevant cost analysis. Okay, our beautiful friend. It has come already twice, okay, in just the few examination dates we have. It tells you that, yeah, it's it's an area that students don't like, so the examiner wants to prey on students. Okay, and I think I was telling you this in the in other discussions, not I think in MA though. But the thing is that you see, the examiner reads the room, and then based on results that have come, if there are topical areas that students have problem with, what the examiner does is that he brings those in continuously or randomly in the examination cycles. It is then to push students' mind to learn that topic. Then, after students have sort of mastered that area, the examiner will switch. So that's why I keep on telling you that you got to be careful about the way you handle. And if you just want to follow, what came in the last 3 examination dates, you may be in a hot soup, because the examiner can decide whatever he wants to do. When he changes his mind, you don't know it. But relevant costing is there. We know that the rule here will be dependent on our understanding of the English. But when it comes to material, is the material in stock? No. If what we would need is not in stock, then the buying price becomes the relevant cost. Is the material in stock? Yes. If it is in stock, then we need to ask ourselves another question. Is this material in constant use? If the material is in constant use, then when you use it for this project, you have to buy it. Hence, the replacement cost becomes the relevant cost. If the material is in stock, but it is not in constant use, then we ask ourselves the next question: does it have an alternative use? The answer is no. Okay, if the entity is not going to use this material for anything else, then the relevant cost is au revoir mon ami, Zokbo. Very important. But if there's an alternative use, then that alternative use, we will not use it for that. And so the lost contribution, lost revenue from the sale or usage of the material to produce another product becomes the relevant cost, and that is the opportunity cost. But the last one is the interesting part, that if there is no usage for the material, but the entity has to dispose of the material at a cost, then it means using the material for this project, we will not have to incur that disposal cost. Now, that is a relevant cash flow, but it will reduce how much we charge the customer. So those are the nuances about the material environment. But as always, it all depends on the way the English is stated. So your ability to comprehend, understand, interpret the English expression is going to be crucial for you to pass the examination. That's very important there. Then you come to labor, same idea. Is labor permanently employed? Mba, there be. Okay, then it means that when we employ them, we got to pay them. Awesome. Is labor permanently employed? Yeah. Okay. Do they have spare capacity available? That's the next question. 2 answers. No. Yes. If yes, they have spare capacity, au revoir mon ami. So the relevant cost there is going to be 0. Unless they will work overtime above the spare capacity, then the overtime payment will be the relevant cost. So be careful there. Yes, there is a spare capacity, but they may have to work overtime over the spare capacity. If they have to work overtime above the spare capacity available, then the normal wage we pay them for the spare capacity will not be relevant. But the overtime that they are working for, that will be relevant cost, and we have to build that into the system. Can labor do overtime, spare capacity? Do they have spare capacity? No. If they have no spare capacity, we have a couple of options. Option number 1, transfer them from the existing job to this job. Stay with me. If you are transferring them from the existing job to this job, they are permanently employed, so they will get their salary either way. But now that you are transferring them from an existing job to this job, then the lost contribution from that job we won't get. late submission of that job, we may have to pay penalty. So the lost contribution or any penalty payment from transferring those permanent staff will become a relevant cost that we have to build into the system. Or option number 2, we can outsource their role. So if it is cheaper to outsource, so you look at a deal, if we transfer them, the opportunity cost of their transfer is, say, 20,000. Meaning the lost contribution from their current job is 20,000. If we outsource their function, since they are permanently employed, that can be done at 15,000. So if you are the management accountant, what should we do? We outsource. Because it is cheaper efforts to outsource than to transfer your people and lose $20,000 at the end of the day. And these are the things that we must understand generically when it comes to dealing with relevant costing. So shutdown, limiting factor, relevant costing, make or buy. Should we make the product in-house or buy it from outside? It depends on what is happening here. It depends. So, for instance, if the organization is having a limiting factor issue, then we can use the limiting factor concept to decide which of the products we can make in-house, because then in that case, we will use our limited resources to produce the product that give us the highest contribution per limiting factor first. Then the remaining of the products we will need, you can buy it from outside. So if there is a limiting factor, then we can use the contribution limiting factor concept, do the ranking, and produce first, we're using our limited resources in-house, the product that gives us the highest contribution per limiting factor, then we outsource or buy the rest from the outside. In other cases, there may not be any limiting factor. So if there is no limiting factor, then we have to take into consideration the marginal cost of production and compare that to the buy-in price. Sounds good? So what is the marginal cost if we produce the product in-house? What is the buy-in price? If the marginal cost exceeds the buy-in price, then you buy. Generally at the end of the day. And those are the things that we must understand there. But there's another third layer to the make or buy. This is where it is cheaper. There is no limiting factor, yes, but it is cheaper to make both products in-house. So in that case, which of the products should we make? Which of the products should we buy? And that is where we will go back to the limiting factor concept to look at which of the two products gives us the highest return per the limiting factor, and now say which of the products will give us the highest savings if we make it in-house. So for instance, let's say that we have the marginal cost here, we have the buying price here, we are doing certain products. So let's say we're doing sanitary pads here, we are doing baby diapers here, we are doing condoms here. Right? So the marginal cost of producing, maybe 40 here, 30 here, 30, maybe 22 here. Buying price, 32 here, 22 here, 13 here. So if you check, all the products, it's cheaper to make them in-house. So here is the deal. If all the products, sorry. Let me take that again. All the products, it's cheaper to make them in-house. So if they are all cheaper to make in-house, but we can't make all, right? Because maybe we don't have the resources to be able to deal with all of them. So what do we do then? We can look at the cost savings when we make it in-house. So the cost savings in making in-house here is going to be 8. It's going to be 8. It's going to be 9 here. Then you bring in the cost savings per the limiting factor. So we bring in the usage of the resources per unit to come and divide it. Then you now get the cost savings per the limiting factor. So in that case, You then rank. The one that gives us the highest cost savings per the limiting factor will be produced first. Do you get the idea here? So in the make or buy environment also, the examiner has a way he can dance. We can use the original limiting factor concept, do our contribution per limiting factor, rank, produce what has to be produced in-house, buy what has to be bought outside. Or there is no problem about limiting factor and the products are cheaper to make in-house. But then we don't want to make all of them in-house. Okay, so which one should we make in-house? Which one do we buy outside? Then you can use this concept as well. So under the make or buy, it is dependent on the structure of the question and the principle we have to call on to decide which of the products can be made in-house and which one can be brought in from outside. But that is the concept of make or buy as well. Very easy. Then we come to throughput accounting. Now remember, as I keep on telling you, throughput originally is not under short-term decision as per your syllabus slide because it's under models of evaluation there, but it's part of the short-term decision scenarios. So we can have dedicated throughput accounting question coming up. Also, one of the things outstanding, if you remember, I told you about, where we are calculating the throughput accounting ratio. Pretty easy. Return per factory hour, cost per factory hour, interpreting the throughput, and most importantly, what should we do if the throughput accounting ratio of a product is below 1? Right? So those theory issues there about throughput, we got to understand them. Then our main guy, break-even analysis. It's an area, again, that the examiner has not really exhausted based on the structuring of the syllabus. But break-even analysis is there for us. And it's a complex area, right? Because we have the regular break-even analysis question where, calculates the various issues. The normal things. Then we have break-even analysis in a multiple product environment. That was asked, I think, last 2 semesters or so, multiple product environments, margin of safety, and a little bit, but not weighted average contribution to sales ratio. So multiple product environments, significant or huge area that we need to know about in that particular case. Then, so the regular calculation, the issue in respect of the multiple product environment. Then there is a third styling of break-even question, where I think we solve a styling of question like that as well. Those of you in the practice question course, you might have seen some styling of questions where the entity is making some short-term decisions. But we have to apply the break-even rule. For instance, the entity has option 1. Should they increase selling price by a certain amount? It affects volume by a certain amount. It affects fixed cost by a certain amount. But you are using the break-even principle to approach that question. So I will say that the break-even understanding is something that you have to know about because it's a marginal costing principle. Because all the short-term decisions, marginal costing principle. But in break-even analysis, we see the marginal costing principle really at play easily. So we must understand issues there, the calculation aspect, the theory aspect. Assumptions of break-even analysis. At least 4 of them off head. Then the limitations. As you know, we've said this, you don't need to learn the 2. If you know the assumptions, flip it up, they become the limitations. But that is the idea about break-even analysis as well. Short-term decision that we must know about. So shut down. What's the decision rule? Context of the question. How do you go? Limiting factor analysis. Decision rule. Context of the question. How do you go? Relevant cost analysis, the principles, the English, make or buy, the rules and the application of the rules. Throughput accounting, the rules and the application. Break-even analysis, the principles, structuring of the questions, and the application of the principles. Then we have outsourcing decisions, which technically is under make or buy though. So it's a theory issue that we are having. So what factors does the entity take into consideration before outsourcing? something like that, right? What are the factors an entity will take into consideration before outsourcing? So it's an issue that the examiner can ask us about that we must be mindful of. What are the advantages? What are the disadvantages of outsourcing? Then the last thing under the short-term decision, also a theory area, is pricing decisions. What factors does the entity take into consideration before setting the price? Or what are the driving indicators for setting the price for a product? Then the various pricing methods available. These are reading areas that by now definitely you have read at the end of the day. So we have the prestigious pricing, the cost plus pricing, we have the discriminatory pricing, market scheming pricing, market penetration pricing, all of those nuances. But that is short-term decisions. Question 5. A. That's where one of these guys will be there. The examiner could do 2 if he gets goosebumps and he wants to get a lot out of you, then he could do 2 of these short-term decisions nuances in the exam hall. But the key thing is we must understand the principles underlining all of them, because 1 or 2 of these guys will be in the exam hall. Again, your problem will be comprehending the context of the question, then applying the principle. Because you may see, oh, calculate the number of units the entity should make in-house and the number it should buy. It's, it's make or buy. But then what do you do? Do you look at the marginal cost of making and the buying price and use the cost saving concept to do your calculation? Or do you apply the limiting factor analysis concept? It all depends on the structuring of the question and what you have available based on the context of the question. So that is what you must understand there for that area, short-term decision as well. So variance, budgeting, short-term decisions. Then certainly we come to performance management. Right? Question 1. So you're going to see, boom, question 1. And we said the examiner has a lot of options here available. Either the examiner will say, hey, I want to focus on a division. Okay. So in a division, or the concept of divisionalization, then the examiner is going to do whatever, transfer pricing. Okay. Or the examiner will do performance measurement and payment of bonuses using those guys, RI, ROI, and EVA, economic value added. That's the issue there, under divisionalization. Now, in the transfer pricing environment, you must know, based on the context of the question, how we calculate the transfer pricing. We spoke about the various concepts that you must understand, even under the transfer pricing. Permit me to draw your attention again to something real quick. Under the transfer pricing, it's a theory, or there are theory issues that the examiner can ask you. So permit me to just highlight that to you again as we go. We mentioned that in the calculation of the transfer pricing, it depends on what is happening. So if there is a limiting factor and the division has a lot of external supply, then in that case, it will be the minimum transfer price will be the marginal cost of production plus the loss contribution, the opportunity cost. But if there is no limiting factor, it means that the minimum transfer price will be the marginal cost of production. Those are the bare minimum issue. But remember, we spoke about the two-part tariff concept, right? Where the entity is taking a fixed amount of money, which will usually be the selling division's fixed cost, and then a variable component, which is going to be the marginal cost they incur in producing the thing. So technically, they are getting all the money back from the buying division. It's like we are producing it for you. So pay our fixed cost, and pay the marginal cost of production as well. That will be the minimum. If we want to add a markup, then we'll come there. So that is the two-part tariff. Then we spoke about the dual pricing methodology as well, where we said it's in two folds. One, the entity can decide to charge external customers a different price. That's the selling division can charge the external customers differently, and then we'll charge the internal division also a different price. That is a dual pricing mechanism, because maybe when we are selling to outsiders, there are certain costs we don't incur. So selling to the internal division, the same price we sell to the outside division will be illogical. So then we adopt the dual pricing. So external people price may be higher than the internal organization or internal division. But another concept of the dual pricing is where we say that, okay, we're going to charge maybe the marginal cost of production to the buying division. Then our markup, if there is any, and other fixed cost, the head office will be responsible for that. That is also the second concept of dual pricing. Now, the reason I'm bringing all of these back to you and we discuss them, use them to solve a question in class, is because these are the nuances under transfer pricing that the examiner, if he wants to get goosebumps, is going to be hitting you with. And note that all these principles we are talking about are applicable irrespective of the industry we are in. Right from the standard costing to where we are now, the law is the law is the law. The principles are applicable. And that is what we must understand in the concept of divisionalization. If the examiner so wish to go there, then we're going to be going there with these. And then we did the performance measurement issue or the transfer pricing. Note also that we solved the question still under the divisional performance measurement, where we calculated some profitability ratios. If you remember, asset turnover, net profit margin, gross profit margin. That styling of question is also there. But that is divisionalization. Then we come to the whole company analysis, right? So the entire organization performance, if the examiner wants to go there, then we can use ratios, financial performance, or use the balance scorecard to analyze the whole organization, or a sample, a question like Jungle Co., what we discussed during the mock session, the organization as a whole. So in the question one area, it depends on where the examiner wants to go. Is it the whole organization that the examiner wants you to measure their performance? We can use ratios. We can use the balance scorecard. We need to use both financial and non-financial performance indicators. You're going to be interpreting a lot of things there. Or the examiner wants to just focus on divisions. That's also there, available, that we must understand. Remember, I told you to also read on the Fitzgerald and Moon building block, because alternatively, especially in the service organizations or service industries, the balance scorecard, although could be applied, doesn't work well. So in the service organizations or service industries, we apply the Fitzgerald and Moon building block. So in that 20 marks area in question one, these are the things. So RI calculation, ROI calculation, EVA calculation, and then the determination of the transfer pricing using either there is a limiting factor, there is no limiting factor, using dual pricing or two-part tariffs. Whichever. I don't know what the examiner is going to do, but you must know them. In some instances, that question one, the A part will be 15 marks, so that there will be a written part theory for 5 marks. So in the question one of the things as you are reading you could check quickly is the B of that question one. It could be a written question that you may take, and that written question may be related to performance management, or it could be other areas of the syllabus. So if the examiner wants to do 15, then he will bring a 5-mark theory question in the B part that you need to address. But that is the performance management area that we must understand as well. Very sweet, simple, straight to the point. Then we come to the final 15 marks area, what happens in the public sector. Okay, what happens in the public sector? So project appraisal here. And so we must make sure that we remind ourselves about the methods of appraisal of projects. The traditional methods: accounting rate of return, payback period, discounted payback period, net present value, internal rate of return, which is the same as the break-even rate, right? The rate at which the NPV of the project is 0, the break-even rate. So that is something that we must understand there. So these basic methods. Now, in the last 3 examination dates, the examiner hasn't gone to any of these. What the examiner has been focusing on in the last 3 examination dates has been the new things that are used to evaluate projects in the public sector. That is the cost benefit analysis, and then the cost and the benefit cost ratio. Okay? So these are the 2 things the examiner has been focusing on in the last 3 examination dates. And as I said to you, the examiner has a goal, and there are things he wants students to know. So he leads students to know and master those things. Then in an examination date, once he is satisfied that, oh, now students are okay with it, then he shifts their attention to other areas of the syllabus. And that's the play of the examiner. So in the last 3 examination dates, if you check, this is where we've been dancing at. Cost benefit analysis. We look at the present value of the cost and the present value of the benefit. But if you pay attention carefully, we said the benefit is actually the contribution from the project. And then the cost is actually the fixed cost of the project. So that's the nuances about the cost benefit environment. So the benefit is going to be your selling price minus the variable cost to get your contribution. That is the benefit. Then the cost on the project will actually be the initial cost of investment in the project plus any fixed cost that we will incur. So be careful there about cost benefit analysis. The cost benefit ratio, present value of the benefits divided by the present value of the cost. If it is greater than 1, accept the project. If it is less than 1, reject the project. So in the last 3 examination dates, these are the 2 the examiner has been focusing on. So in November, for instance, there are students, their whole agenda is on cost benefit analysis there. That's all the agenda. Because that's what the examiner has been doing in the last 3 examination dates. And so if you're not careful, you will then lose guard on ARR, on payback, on discounted payback, on normal NPV workflow, or heck, the other ones, cost effectiveness analysis. You may lose guard on them. So be careful not to optimize yourself here and be caught off guard here or there. So cost effectiveness analysis and then the cost outcome analysis. Make sure you do not ignore those other methods, because it's likely that the examiner it's going to pause his agenda on these 2 issues, the cost benefit analysis issue, because he might have achieved the goal that he wants to achieve. Now let's go to other methods of appraising projects in the public sector. So that is where students will then go and be like, oh, accounting rate of return. Oh my God. They are trying to remember what they learned in financial management, but it's going to be fuzzy. Then you know at that 15 marks, it has become au revoir mon ami. All I am saying is be careful not to check the last 3 examination data and say, oh, the examiner has been bringing this. It was Amakasene. Know that the syllabus has other aspects. The topic has other areas. So, yes, know everything. And that's why if you pay attention over the last 12 weeks and throughout our discussion, I don't leave anything on the table. I am teaching you based on the syllabus and what the options available at the disposal of the examiner. But another layer of thing that I'm adding to you is the objective of the examiner, that he is on an agenda to point students to various areas of the syllabus over the life of the syllabus. So if he achieves the target of pointing students to a certain area, say over 2 or 3 examination dates, then he's going to change his way if there are other areas available. So don't die on the mountain of cost-benefit analysis by not moving forward to the traditional methods of investment appraisal and cost effectiveness analysis and cost outcome analysis. Please review them as well for that 15 marks area that the examiner is going to be bringing on public sector, or the role of the management accountant or management accounting in the public sector. So that is basically the issue there that we need to understand going into this public sector environment. Please note there are a lot of theories here. And this is question 4A. There are a lot of theories here. So you can go there and there's no calculation on the public sector area. All the 15 marks is a theory. So please be mindful. So in a grand scheme of things, where we're going to have that 70%-ish calculation issues, these are the main issues we need to understand. Standard costing and variance analysis, budgeting, short-term decisions, performance measurement, then the role of the management accountant or management accounting in the public sector. If you can get these principles right, you're going to be good at the end of the day. Then certainly those theory issues that we discussed during the last session of our revision, and the document was also shared with you there. Make sure that you go over them before tomorrow to put yourself in the position to ultimately pass the examination at the end of the day. Those ratio issues that we dealt with, the efficiency, capacity, and effectiveness issues, and then the models of evaluation, those discussions we had, please make sure that you go through them, because again, there are a lot of things there. Benchmarking has been the favorite of the examiner, okay? But business process reengineering is there. Total quality management is there. Just-in-time is there. Value chain analysis is there. Environmental management accounting is there. IT issues in management accounting is there. So there are a lot of other nuances. And that's why I went through those discussions. And this is your question 2A. In the exam hall, question 2A. So the contemporary issues in management accounting, those theory issues that I've highlighted on, that's your question 2A. It's theory. Question 2 largely is going to be theory. The A aspect is going to be the models of evaluation. Then the B aspect may be budgeting or any other area in the syllabus theory. 10 marks as well come in there. So technically the question 2 promises to be a 20 marks theory question done deal. Then the other theories may be spread across other aspects of the syllabus depending on the objective of the examiner. So please make sure you take time to go through all of those things and the ethical issues as well, because ethics is in management accounting, and Nuntina, we discussed that one too. So in bringing my discussion home, let me start with what I mentioned, that you read all the questions and you answer the theories first. Please, we don't have time to waste. We don't have time to try things. We don't have time to, try, my quit. No, we got to hit it in the head straight up. So the whole of question 2, 99.9% of the time is going to be a theory question. So take your time, read through all the questions, and then answer the theories that you can do best first. The only issue is that do not answer 2 different questions on the same page. That is to help us to deal with time, to help us to attempt as many questions as possible. So if you can take out all the theories first, from there, variance. If it is a calculation, you could answer on it based on the understanding. Budgeting, if it's a calculation, you could dance on it. Short-term decisions, question 5A. That one is going to be calculation whether you like it or not. So whichever short-term decision is there, you can look at it. Question 1, performance measurement. Whatever that is there, you can look at it. Please, in case your brain lied to you, okay, and I'm saying this friendly, in case your brain lied to you, and you start with a question, and you realize that enkoye, it's not going well, hold it and go to somewhere else. But you got to be careful, because if that is happening in the earlier part of the exam and you approach a question and realize that it's becoming difficult, it will, you stop it and you go to something else. And that also appears to be a challenge. Then you start building up fear. You start building up anxiety. So that is why we said, to prevent all of those nuances, you make sure you understand the principles. Because once you understand the principles, the concepts, and go with the way we have mentioned, you should be good at the end of the day. So, master all those written aspects under each of the topical areas. Then, in the exam hall, answer all the written areas first. From there, you can apply your understanding and attempt all of the questions. Take time to read through all the questions. Okay? You may see the question 5A, maybe it's a shutdown decision question. Yeah, and you will think, it's easy to do. But if you're not careful, it may take you more time. So take time to read through all the questions very well to build your understanding generally at the end of the day. And if you can do that, I think you should be in a comfortable lead to ultimately pass the exam in that regard. And definitely make sure you rest well. Okay, so from here, freshen up, go to bed. Tomorrow morning, eat a nice breakfast. Be chauffeured to the place or drive, get there early. Relax, and you should be good at the end of the day. So these are the things that we want to draw your attention on. Again, try to crystallize some of the discussions that you need to understand when it comes to these thematic topical areas. And we hope that you can go and make yourself proud to pass the examination generally. So please, time will be your enemy, whether I like it or not. So work with speed and accuracy, bearing in mind, if the examiner is going to do 30-70, that's a good deal for us. He can even do 40-60. Because the more theories we have, the better our chances of saving time, moving with speed and accuracy in the exam hall. So that's why I'm saying, when you get there, when the paper comes, just calm down. Read through all the 5 questions, because the theories are going to be spreading across not only in question 2, but maybe spread across. Question 4B could be a theory. Question 5B could be a theory. Sometimes the question 5B is even also a calculation question. That's why I said maybe. So just read through the questions. The easy theory areas, pick them out. Then you can start thinking on those calculation areas. But in every topic, pay attention, review again the structure of the questions, the options available to the examiner, and crystallization of the various things that you must understand. If you can do that, I think you should be able to go into the exam hall and pass the examination. So that's it about that. I'm going to wrap up around here. If there are any other questions, you can bring it up quickly. If not to, then I think we will wrap it up here as you go into the exam hall. And we wish you the very best. Give me a sec. Okay, so it means we are in a comfortable lead. So we wish you all the best as you go into the exam hall tomorrow. And I'll be on standby until tomorrow 9 a.m. So certainly, if there are any things that you want to ask me about, certainly you can reach out and you'll be assisted. Wish you all the best as you go, and make sure that you calm yourself down, focus, and you should be good. All right? You should be good at the end of the day. Also, then, pray for us. Yeah, I've been praying. You will be good, okay? God will be with you. And you have peace of mind and sound mind and go successfully. So just manage yourself and be calm. All right? God will give you the sound mind you need to pass the examination. So just be calm and do your part. And it shall be well. Okay? So you're going to be good. You're going to be good in that case. I said, the mind to understand the question. Yeah, that's why I said just stay calm and focus. God will help you. Okay? God will help you. You just need to be calm and focus. If you can be calm and focus, the inspiration of the Lord will come upon you. And the power of the Most High will overshadow you. And you will do exploit in the exam hall and give glory to God on the 30th of November 2025 when your results is out. All right? So that's it about that. All the best, and we'll see you some other time. Bye-bye.